Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Tom Moore, manager of the Standard Life Investments UK Equity Income Unconstrained Fund, to give his 3 stock picks. Hi Tom.
Hi Emma.
So what's the first stock today?
Well, I'd like to start with Saga, which is a business that targets people over 50, so I don't think it applies to either of us at the moment, although it will be coming onto the radar screen soon. This company has a huge database of members. And they target members who are going for home insurance or motor insurance initially, and then they cross-sell products such as credit cards, travel like cruises, and also new products that they've started, such as investment services. So Saga's having great resonance among the over 50s. It's a brand that really is trusted. That's quite unusual in the financial space after so many years of bad press for the banks. So it starts with a really big head start over the big banks and insurance companies. And I think that's what they're using to cross-sell. And it's a business that should continue to grow its earnings by mid-single digits, 5 to 7% is their target over the coming years. They've got multiple levers through which they can achieve that. So we've got confidence in this management team. It's been owned by private equity for some time, slightly undermanaged. We think there's more they can do to start to grow earnings a bit faster, pay down debt, and over time that will come through in the form of growing dividends.
And the grey pound is incredibly powerful in the UK. We've recently seen its influence over politics in the UK, but indeed the disposable income of the baby boomers is large. Are there competitors for this grey pound, though, in the market, or is Saga standing alone?
I think they are on their own. We ask them that question when we meet management. We say, look, is there anybody comparable globally to you? And actually, even in the US, even in the rest of Europe and Asia, it's very hard to find anybody with this resonance, with this brand that just means something to people. It's trusted, and I think that gives them a huge head start. So I think this is an unusual stock. It's trading on a pretty low PE multiple, so the valuation's pretty attractive at about 13 times earnings. That's a lot lower than the market average at the moment. And given that there's growth there, I think it's a stock that should do well. It features heavily in my fund.
And what's the second stock today?
The second stock I want to talk about is National Express. I think all of us will have travelled on a National Express coach from time to time. They also have buses in the UK. That's what we know them for here in the UK, but there's more to National Express than that. They've been busy diversifying. So there's a lot of talk about Brexit at the moment and what that means for the UK economy. Bus and coach isn't particularly sensitive to the UK economy anyway. It continues, but obviously they've got more and more exposure to overseas. They've got a big business in Spain, a coach business, which is doing pretty well, growing its earnings at the moment. And they've also got a big business in the US, school bus business. So National Express is doing well overseas, and they're also picking up new businesses such as German rail contracts. For all the bad press that some of our rail companies get here in the UK, some of them are actually busy expanding overseas and doing what they've already done here in the UK with their franchises and growing overseas. It's a success story, I think, for the UK, and it's one that will continue to grow its dividend.
And what's the third and final stock?
Final stock is one that people will know well, BT, love it or hate it. I know it's had a lot of bad press recently in terms of Openreach. They seem to have come to a deal with the regulator, Ofcom, and it looks likely that will be resolved in the next few months. So that's a big headache for the shareholders, which is now going away. And what the rest of the market has actually missed during this period of this regulatory uncertainty, coupled with the fears over Brexit, which have contaminated lots of companies, is that actually BT's continued to grow its revenues and its earnings very, very rapidly over the last few months and years. And one of the ways they've been doing that is they've been busy buying other businesses. So they bought a business called EE in the mobile space. And what's really encouraging here is that they're able to cross-sell. So a bit like Saga cross-selling its home insurance and travel insurance with travel and investment services, you're finding that BT is cross-selling mobile with fixed line and broadband, and now TV. And so there's this concept called convergence, and convergence is happening, and the biggest beneficiary of that is actually BT, who are able to take a bigger proportion of the customer's wallet each month, and that's helpful for shareholders. And again, good, strong dividend growth, and that's something we like to see in our fund, companies that can grow their dividends year in, year out.
Tom, thank you very much. This is Emma Wall for Morningstar. Thank you for watching.